We've got the Sluymer here on deck. Traders have given their take on whether or not the markets will go higher or lower in the next 10% move. Let's go off the charts with Fundstrat's Rob Sluymer to see what he thinks. Rob, what do you think? Next 10%, higher or lower?
I think the next 10% is higher. I mean, I think you have to just respect the underlying technical action of the market from what we've seen from the March lows, but particularly since what we saw between June and October, where so many cyclical stocks traded sideways and are now breaking out. So even if you just look at the Dow over the last couple of months, and Tim alluded to this, we had these 10, 11, 12% gyrations back and forth, and the market's just breaking out of that range. And so if we just look at a 26,000 to 29,000 on the Dow, a breakout, and the market's just sitting right above that trading range, I got to say it's pretty bullish action that it can just consolidate here. I think the next 3,000 points plus are to the upside. And sure, in the very, very short term, if we're talking about the next week, a lot of micro caps and small caps have been blistering hot, financials, energy. We could get a little dip here into December, but I don't think it's a 10%, and I doubt it's even 5%. I'm thinking more like 2 or 3%, and then we move higher into the first quarter, through year end and into the first quarter. The underlying market cycle is still very bullish. Breadth is expanding, as you pointed out, Melissa. The VIX has nowhere near collapsed to levels where I'd be particularly concerned. It still looks like 2012, 2016 after the election. I think we've got a long way to run in this market before we see a cycle peak. So we're still very bullish.
All right, let's talk about the two stocks you see that have the most opportunity. Rob, what are they?
Well, great. So look, a lot of things have run pretty hot. Tim was talking about the financials running, energy stocks have run. I can't say they're the most timely names after a 20, 30, 40% move in some of those stocks. So I still like DuPont. I think it's a big cyclical that's going to benefit on the upside if we are moving through this economic malaise. I think that's a very timely name. It's been trading in this sort of 55 to 65 trading range. It's breaking out and still relatively timely. It's not extended. Relative strength is still improving. And the last name is American Express. And yeah, it's had a big gap up here, but it's just consolidating those gains. Above that, call it 115, 117 trading range. I think it still looks pretty timely from a trading standpoint. And I think there's more upside into the first quarter.
All right. And then the one stock that you say is stretched.
Well, it's not. I guess I got to qualify. It's one name that I would avoid. You know, Procter & Gamble's really been in a trading range now for, call it 2 months. But if you look at the bottom panel of this chart, that relative performance is decaying. You got a high in March, you have a lower high. It's the type of stock that I think continues to lag the market going into year end in the first quarter. And I would stay on the sidelines here. I don't think it's a bad chart. I don't think you're going to lose a lot of money, but I don't think that's where you're going to get the juice on the upside.
All right, Rob, great to see you. Thank you. Have a good Thanksgiving.
Thank you.
Rob Sluymer of Fundstrat. Brian Kelly, where do you go of Rob's picks?
So I think, yeah, I like American Express. I like the view. I like how the chart looks on that because I have a pretty well-defined range in terms of how I want to trade it. So you're trading this as a breakout. And then if you think about what's going on in the world, you know, American Express tends to have a higher-end customer. And what's going on is we have this K-shaped recovery. So stock market going higher. People who buy stocks tends to have an American Express card. There's less of a chance for some sort of delinquency on that. And so if you get some spending increase and you get a stock market where cyclicals are going higher, and now I have a tradable range, I think American Express is the one that I would pick.
It's also like a secret recovery play because of its exposure to travel, which had been the problem during the pandemic. Dan, which one do you like here? Which chart?
Yeah, I like American Express. You know, the day of that first, a couple weeks ago, when we had that, I think it was the Pfizer vaccine, and American Express gapped up 15%. It was up much more than many of its like banking peers, and I just thought that, you know, up in the high teens, you're probably going to get a pullback towards that 110. That was kind of my final call. I said when it comes back to 110, that's where you reload on these things. And I just want to make that point is that I think the market, given the volatility we're seeing in some of these laggards, you're going to have opportunities to get back in and these stocks at breakout levels, especially if you have a longer term time horizon, like playing for the end of this year into next year. These stocks are not going to go straight up.
I mean, these groupings that Rob had put forth, they are like a reopening basket with chemicals, right, in American Express versus the pandemic trade, which is Procter & Gamble, which had gone higher, obviously, as people stock up, Guy. So which side of the ledger are you on?
I'm on the DuPont side of things, and if you want to go full circle, I mean, this time last year, DuPont was a $72.50 stock, so it stands to reason we'll do that full circle. And we've actually talked about a lot of these deep cyclical names. You know, Caterpillar's been a name that we focus on, and that's done extraordinarily well. So I'm with Rob on that one. I do think Procter & Gamble's extended. Just on valuation, it's just, you know, an absurd to me that a company with the earnings growth of Procter & Gamble in this environment is trading at the valuation that it is. But that's what the market has seen fit. I would definitely be getting out of P&G here, and I do think there's room in DuPont to the upside, 72.5 being the top level.
I mean, I think the question for Procter & Gamble, Tim, is in any other environment, can Procter & Gamble have this valuation?
Probably not. But before we finish with Procter & Gamble, I have to say, whenever I hear DuPont, I think guys with me on this, I think of Andre Moose DuPont, who was a bully for the Flyers in the mid-'70s. Yeah, yeah. Anyway, you asked me about Procter & Gamble, and I think the dynamic for P&G, at least through COVID and stay-at-home and food stocks, put multiples on a lot of these names. I think P&G, through the Nelson Peltz agitation, through some of the spin-off dynamics, really has a lot of good news priced into it. I don't like the stock at all here, and I would rather be in resources and banks. I would lean towards the resources, and even after a decent move in DuPont, you don't buy commodities when they're cheap. You buy them when they're expensive, and I think the recovery here in this reflation trade is fourth inning, not eighth inning, and I think there's a ways to go.
Shepard Smith here. Thanks for watching CNBC on YouTube.